They certainly won't take my advice, but the answer is the first country that can print currency and buy Bitcoin wins. Japan issues $1 billion of yen, buys $1 billion of Bitcoin. Bitcoin, if they're smart, they would issue $20 billion of yen, buy $20 billion of Bitcoin. When they put out the press release, Bitcoin would triple. They would have $60 billion of treasury assets appreciating at 30% a year. And they would end up with a $20 billion positive balance of payments, right? And it becomes a self-fulfilling prophecy. Block announced that they're going to start buying Bitcoin every month. You've seen accretion of Bitcoin by a lot of Bitcoin miners. A lot of them are actually not selling as much Bitcoin as they're mining now. I think you're going to see more Bitcoin miners buying more. I think you're going to see more Bitcoin exchanges buying more. You're just waiting for someone to decide they want the money.
MicroStrategy founder and Bitcoin bull Michael Saylor discussing his prediction for all Bitcoin investors and why he believes $400 trillion is about to pour into Bitcoin. After the Bitcoin halving earlier this year, this is one of the indicators we've been waiting for, which Saylor says marks the beginning of an absolute surge in price. Bitcoin is sitting just above $96,300, up over 38% just in the last month. Saylor believes Bitcoin is about to make history, as we witness one of the biggest price rises so far since the creation of the dominant cryptocurrency. The story has become even bigger in 2024 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially and more than the daily supply. Because the supply has been reduced by half, this has caused a never-before-seen supply-demand imbalance for Bitcoin. And Saylor says everything is about to change.
My advice to a sovereign wealth fund is, you basically start to buy Bitcoin as digital capital. My advice to an aggressive small country, if you're small, mid-sized country and you can print your own currency, you either print the currency to buy Bitcoin or you issue sovereign debt and swap it right into Bitcoin immediately, right? You can borrow money cheap and you loan it to Bitcoin at 24% return or better, right? So that's obvious, but I'm not going to hold my breath on countries because it's a very political thing. I think that the people that are the obvious beneficiaries that hopefully are listening to this podcast would be shareholders, officers, and directors of the 10,000 small, mid-sized companies, especially publicly traded companies, which in essence can't outperform the Magnificent Seven. If you don't think you can outperform Google and Meta and Microsoft and Nvidia, and you have some money, you either take the cash and buy Bitcoin, you issue equity and buy Bitcoin, or you issue debt, either senior debt, or even better, you issue convertible debt, convertible to your equity, and you buy Bitcoin, because that allows you to recapitalize with an appreciating asset, as opposed to decapitalize and have nothing, or to hold capital in a depreciating asset that is kind of burning, has got a negative real yield and burning shareholder value. A company's stock is just like a country's currency.
Right.
The country can issue currency. By the way, the reason El Salvador isn't quite synonymous is El Salvador doesn't have their own currency. So what I said, the first country to print their own currency and buy Bitcoin wins. You need to be able to issue $10 billion of your currency, swap it for $10 billion of Bitcoin, grow the Bitcoin 30% a year. And that's the way a treasury reserve asset's supposed to work, right? Because everybody then stampedes into that with you. MicroStrategy had a $600 million enterprise value, and we had $600 million in cash, and we had no growth, and we were dead money. And we were trading $2 million a day in the stock market, guy. That's just like the Russell 2000, or let's say the Russell 1000, the bottom Russell 1000 companies. They're all like that. They're all 500 million to multi-billion dollar companies, 100 million to billion dollar market caps. They all trade 1 million to 20 million a day. They've all got low growth. Because if you're not Nvidia or Apple or the Magnificent Seven, you just, you can't grow like Microsoft. So We took that Russell 2000 small cap company, we took our cash, we bought some Bitcoin. We bought 250 million of Bitcoin. We put that out on the wire. The shareholder base turned over. We bought another 175 million of Bitcoin. The stock doubled. We all of our employees exercised some stock options. We bought more Bitcoin. Stock increased again. We sold a convertible bond. We bought more Bitcoin. The stock increased again. Bitcoin increased again. You fast forward 44 months, and the stock price 10x'd. The market cap 20x'd, the enterprise value 40x'd. It went from 600 million to mid 25 billion. And so what were we doing? What we were doing is we're issuing our currency, our stock that is, to buy Bitcoin, or we're borrowing against our stock to buy Bitcoin. MicroStrategy is going to keep developing its Bitcoin position. And yeah, it's going to get exponentially harder.
Embracing an unyielding enthusiasm for the Bitcoin realm, Saylor confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Saylor reassures that a long-expected surge awaits as we head into 2025.
You saw Block announce that they're going to start buying Bitcoin every month. You've seen accretion of Bitcoin by a lot of Bitcoin miners. A lot of them are actually not selling as much Bitcoin as they're mining now. I think you're going to see more Bitcoin miners buying more. I think you're going to see more Bitcoin exchanges buying more. I think you see the existing ETFs accumulating, but now we're up to 22 spot ETFs in the world, and they're all in a marketing war with each other. And so they're going to go harder. So I think, and at some point you're going to see these Russell 1000 companies, right? Which one of them wants to crawl out of their zombie state? It's like, you're just waiting for someone to decide they want the money. So I think that when they do that, they drive up the price of Bitcoin, and I have to chase it. My first Bitcoins were below 10,000. And, and I'm buying Bitcoin in the 60s now, and that's okay. I don't know where we'll get to. I know we'll get more. We'll accrete from here. We will acquire more Bitcoin than we have right now, and we'll do it via organic cash and via debt, especially convertible debt, and we'll do it via equity, and that'll be a function of capital markets and all sorts of other dynamics. But I think. Archimedes said, you give me a lever long enough and a place to stand, I can move the world. The place to stand is Bitcoin, right? I mean, it's not a commodity, it's a scarcity. So if it's a scarcity, it's like, if I said to you, there's one city, it's at the trade crossroads of the world. It's the center of the digital economy. One day, everybody on the planet's going to be moving their capital through that city, but there's only 276 by 276 by 276 blocks in that city. And by the way, it's like 94% occupied, but you can buy another one of those blocks if you want. Do you want to buy some more? And the answer is, yeah, I want to keep buying, because just like if I could have bought New York or Manhattan 100 years ago, or 50 or 200 or 30 or 300, tell me, at what year, how many years ago was it a bad idea, right? I think it's always been a good idea. If you can hold, right? As long as you can hold the property. And why is Manhattan a good idea? Because it's a granite island at the middle of Long Island Sound and the Hudson, and it's got great natural harbors. It's the gateway to North America. It was always the best place to put a port, right? And if you look at it and you cruise around it and you stare at it and you look at the fact you can build that on top of that schist, it's obvious people are going to want to live in and do business in that city for hundreds of years. There's $900 trillion of capital or wealth in the world, and I think there's 1 trillion in the Bitcoin network. So 0.1% of the economic wealth in the world has found its way into digital property.
Saylor challenges the conventional macroeconomic metrics asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Saylor asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Saylor highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Saylor also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Michael Saylor? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?